Natural gas futures plunged Thursday despite an intensifying cold front on the horizon. That is likely because European gas prices plunged amid reports that Russia would begin increasing supplies to the continent in November. Benchmark Dutch gas futures tumbled more than 10% to €77.7 a megawatt hour, the lowest level since the end of September, amid easing concerns over supply tightness after Russian President Vladimir Putin ordered Gazprom to start refilling its European gas storage facilities from November 8. In addition, Norwegian top seller Equinor announced on Wednesday it would boost natural gas exports to ease Europe's supply crunch. The increased flows to Europe would help to improve the dire supply situation ahead of colder winter temperatures. The U.S. supply picture is far less alarming thanks to a several-week span of mild temperatures that resulted in a string of larger-than-normal injections. The latest government inventory data continued that trend, with the Energy Information Administration reporting an 87 billion cubic feet increase in storage for the week ending October 22. The injection far surpassed last year's modest 32 billion cubic feet build, as well as the 62 billion cubic feet 5-year average injection. Injections would likely continue into November as well, though some small draws also are on the table. The weather models continued to move colder through the early part of November as an upper-level ridge spikes into northwest Canada. This ridge spike looked to be temporary, though, with the pattern still evolving back into a state that begins to look more hostile for cold moving into the middle third of November. Production also ticked higher to around 92 billion cubic feet. In addition, wind generation was high, particularly across Texas following the storms that rolled through midweek. All of this simply means we will need more cold in order to sustain these price levels or move higher. Prices could weaken considerably over the short run, but this may not drastically change the trend, since value-seeking buyers would likely be waiting for the opportunity to re-enter on the long side at more favorable price levels.